Nick had a dream, working in the tech scene, a 9 to 5, living that American dream. He walked the halls of Amazon, pleasing Jeff Bezos, but one day it ended like a punch to the nose. Fight for reasons he couldn't understand, lost in the system, just another number in the sand. But Nick was a fighter, he wouldn't back down. He packed his bags and headed out of town. Oh, Nick, the day trading cowboy, riding through the stocks, searching for joy. He left his old life, turned his back on the tech world. He's living life on the edge, taking risks with no regrets. Nick was a hard-working man in a small town with big plans. Working at Amazon web service till he got called in, fear in his chest. But oh, Nick didn't let it bring him down, with a fire in his soul. He left that town, he traded a suit for a cowboy hat. Now he's riding high as a day trading cowboy.
What is up, everybody? Happy Sunday. Welcome to Mark Kickoff with Nick4ATick. How are we all doing? How did everyone deal with the chaos that was last week? I hope everyone had a wonderful, wonderful Christmas. Now we're on to New Year's. It is an abbreviated week once again, so potentially this could be an abbreviated prep session. It's gonna be a weird week. I have no idea which direction. There's a classic JP Morgan collar trade into the end of the year that people are talking about on Twitter. So God knows we might just balance wedge, go up to 6,100 or 6,110s and tag it, maybe balance back here, some in the middle. I have no idea. We'll see kind of how things evolve throughout this week, but it is the last trading week of the year. It is not a full week. We are well past that. We do have a full trading day on New Year's Eve, unlike Christmas Eve last week when we had the abbreviated session. But New Year's Day obviously going to be closed, and I expect a little bit of a couple things. Some shenanigans as far as end of the year flows, beginning of the year flows, end of the month flows. So Tuesday could be weird, and Thursday could be even weirder into, January 3rd, I guess, is Friday. So as new positions are established, I personally don't really want to get in the way of whatever that is. It's hard to take this week too seriously, to be honest, just because you're going to have so much end of the year, profit taking, repositioning, and then the same thing happening in January, as everyone's been very profitable this year if you've been long at any point. So who knows? Maybe some of that changes in the early parts, the early parts of January, which is the end of this week. We will have to understand, what it looks like as far as institutional positioning for two different sides of this week, how they want to end the year, close their books, and how they want to begin their year. We are basically at all-time highs, or if not 1% or 2% off of it. I think about 2%. So how does that kind of change how people are thinking? I don't think it changes a whole lot until we get new information, new data, anything that could actually send us either direction. I think there's still a little bit of concern in bond land. I'm not going to talk too much about it, but it's something that we got to keep watching this week, as far as, what rates are doing. They were still up as far as, or at least the 10-year was up above 4.6 on Friday. So I think eventually the bond traders may be right, and that could affect the markets negatively. Obviously, when the 10-year is as high as it is, it's not exactly a good thing for high beta companies, growth companies, unprofitable garbage companies that are in the Russell. So we'll have to see kind of how things change as we, get into the new year towards the end of the week. And then as we move into the new administration taking office into the kind of early parts and middle of January, as we're kind of in that weird lame duck period heading into January 1st. And, really, I don't know what gets done, or they try to force things kind of under the old administration before the new one kind of steps in. So it could be a very weird start to the year, I guess is what I'm saying, in a very weird week. So I'm taking that into consideration with my trades. I got myself into a little bit of trouble. I just was early on a lot of trades last week. I don't know about you guys. I was too early, kind of longing a couple times, and then you miss the whole, you've got no dry powder left in my live account, for example, for that actual move up. That happened to me on, I guess it was Thursday. I just longed it just a touch too early, hit my daily loss limit on 2 stop outs, and basically had nothing left. And then we took off and we're off to the races. I did have a couple nice trades with some options. Between when we were sitting up here on Thursday, I went short for another January type swing trade for some downside, and ended up actually covering almost all of it on the initial move down off the pre-market and then into the open. So a lot that can happen. It's definitely volatile. It's definitely seeming like it's going to be a trader's market, at least in the early parts of January and potentially in the latter half of this week. We've got volatility. So for me, I love it because this is good volatility. This is not like the Bank of Japan coming out of nowhere. We're not quite to Trump tweets providing some bad volatility where it's just, you just have no idea when it's going to potentially come and how we have to react from there. So we'll kind of see how things evolve, as I'm saying. As far for the prep for this week, if it ain't broke, don't fix it. With the kind of 60-30, 60-40s pivot from last week acting as a solid pivot, if I'm being honest, once again, just kind of being in the middle of that distribution, you saw it kind of act as support and resistance for a couple times this week. We came up, we pierced above it, came back down, retagged it, kind of tested that as a reoffer, and then we sold down. And then we kind of chopped and balanced, used it as support, and went up towards basically the week highs. Came back down, obviously, with that flush Friday morning. And then where did we settle at? Right at Nick's pivot. So with all of those kind of touches and consolidations in that area, it seems like it's going to act as that flip in theory for at least a good area to be looking, long versus short, or feel confident in your, entries if we are above or below that price. Once again, I've been saying this for the last couple of weeks as a couple of my pivots, at least for the last month, I would say probably 2 or 3 of the last 4 weeks have been very solid, like placement as far as good areas to kind of just pause and see how price action may have shifted or changes or just who's in control at that point. So it has provided a couple good reoffers. It's provided a good, entry for support for longs. So I'm not going to move it for the time being. It pretty much is kind of almost the middle of last week's distribution, and it almost is the point of control. Depending on your software, it actually may be the point of control. It's another higher volume edge in this distribution from the previous week. So with that being said, I'm not going to move it. And even looking at the last few weeks, that basically is kind of the value area low, at least that general area for all of the volume for the last, 3 plus, maybe even 4 weeks. Yeah, a little higher because of that. But just looking at that, I think that's a decent place to, like we said, cover trades, not necessarily initiate, but feel confident in potentially the direction, because above this, and we said this last Sunday, if you get above, I think we said this, yeah, it was last Sunday when we were talking about kind of that 60-40 spot. I think I was talking about it again on Monday after kind of just not exactly following my plan. Or maybe we reoffered there. I don't remember exactly how it all transpired, but we were talking about this spot last Sunday. And I was talking about it whatever day on TopstepTV, and it almost was like this simple trade that would have kind of worked. And I never took any trade off of this pivot. I was kind of I played a high, I guess it was on NQ. I played a reoffer in NQ during the kind of later part of the morning session on Friday and took a nice short off of that. But volatility is here and I'm all for it. And, there's definitely going to be some good trading opportunities this week. As far as ES, if we can't get above, just like last week, if we can't get above 640s, I would expect these kind of lows from last week to be retested and potentially fail. But if we can hold and build volume kind of like we did here on Monday, I excuse me, I would expect us to go make a trip back up here towards 6110s, maybe even 6112s, kind of being a higher side of some of the options activity that I was seeing. And even the implied move, I think on SPX is about like 80 to 85 points. So right around this general area. Obviously with the holiday and who knows how, end of the year flows. And as you guys have seen month after month after month, sometimes those last day of the month flows can be incredibly bullish as our 401ks and everyone's grandmother's pension is just continuing to buy, the all-time high. So you may see, even if we're trading down here in the 40s on Tuesday afternoon, you may start to see that move up, and who knows how high those flows can push us. It's just, in a weird way, it is just kind of like forced buying. It's not real buying. It's just everyone's, all of the ETFs, everything else just getting money funneled into them, and it's all buy orders. So you don't stand in front of it. If we get that type of move, I would tell you, if you're going to still be trading in power hour, it's a great long, it tends to work. But with it being end of the year, who knows how it may shift, may adjust, but do not try to short that move, I guess is what I'm saying. If it does happen, we see it every single month on the last day of the month, and it just is super violent to the upside. So just head on a swivel. If you are trading power hour on Tuesday, just be aware. If you get any sort of bullish momentum towards that close, do not try to short it. Try to find an entry to join along with it. It just tends to move that way. So like I said, if we get above 6040s, I'm looking for a full rotation up towards the 6100, 6110s, as kind of potentially a capping area for the week. And it's kind of the bottom edges of these distributions. If we were to completely unwind FOMC, I still take it with a grain of salt, just given everything else that's going on. And, the fact that that's just a knee jerk reaction and the market's just going to shake it off, so be it. But I would imagine I covered most of my swing short for January, but there was a reason I was taking it up here. I don't know if I would take it again, just given if we are that volatile, but it's something I'm keeping in the back of my mind. The move is one thing. I kind of want to see us sustain a move higher before I'm, really bought in that, at least for maybe the next couple of weeks, that these highs up here, up towards 6170s, may be in for at least the next week or two. I kind of want to see how the market continues to digest what was talked about at FOMC, and I kind of want to see what's going on with bonds and how that shakes out for the next few weeks before I'm really ready to. You guys know me. I guess you can call me a perma bear or whatever. I suck at buying the all-time highs, and I'm just waiting for a good rotation down, kind of like we saw in August. I just have no idea when it'll come. So that's the idea for ES. As far as if you were to get real downside, I don't think we'd get too much further below kind of 5,900 as it is going into the end of the year, and with passive buying towards the end of the month, end of the year, at least for Monday and Tuesday, I can't see us going that much lower than this for the time being. Just once again, based on options, based on everything else I'm seeing, the implied move just doesn't make a whole lot of sense unless there's news, there's data, there's something that changes. So until then, play the ranges, play the edges, but I'd be looking to see if we fail at 6030s, do we go retest last week's lows down here towards 5960s, 5970? Doesn't mean I'd catch the knife there, but that's kind of the gist is I'd be looking. It's kind of was a balanced week. If you take out, I know we have two distributions up here, but it really was based on kind of where we closed and where majority of the volume was traded. So that is ES. We'll jump over to NQ. We are going to, we're on our good, I can't speak right now. We're opening in 2 minutes. Sorry about that. All right. On NQ, a little more of a double distribution based on the volume profile from the previous week's sessions. Obviously a little weird just with us having a half day and then no trading day on Christmas Day. So we're going to kind of use, or at least I'm going to use this kind of this 21,800s, 815 spot again as kind of an area that I'd be looking for that pivot to kind of be placed. I don't usually place them on NQ just because it doesn't respect certain things, but it does respect high volume edges. So I would really want to see buyers get us back above this 21,800. We're just going to use 3 digits and say the 800 spot before I'd really be getting too crazy long, kind of in this middle of this range. I don't really want to get chopped up between kind of the 7s, the 750s. Like, I don't really want to enter over here. Just a lot of consolidation and chop when you look at this from a longer time frame. This is just a massive amount of volume that I don't want to kind of screw around trying to figure out which direction. So if we get above 800s, I'd love to long it for a trip back up towards the 22,000 mark where we sold off on Friday, or I guess it was technically starting in the overnight, on Thursday. But given the sell-off on Friday, I know we kind of have drifted back up, but I'm a little cautious with longs in certain spots going into this week, at least until buyers show me something. So on the downside, I would expect if we were to not be able to kind of build volume above 800s again, for us to potentially go down and retest some of these areas from FOMC back down towards the 400s, maybe even down towards the 3s if you got real weakness this week. Obviously, that's only 400 points. NQ could melt 800 in 3 seconds and nobody blinks an eye. So at the bottom edge of, with that in mind, I guess, and like, are we gapping up? We are moving up a little bit. I don't know if NQ gapped. No, didn't gap, but is moving a little bit higher. So if you were to kind of hit the bottom edges of last week's range, kind of lose that 500s, like I said, rotation down towards the 250s, the 300s, and a bottom edge low probably down towards 21,100, where I'd be looking to be a buyer, to be honest. All these weeks of consolidation, at least for the time being, somewhere down here makes a lot of sense. Yeah, 2130s, but sorry, 21,130s. But yeah, once again, just like with ES, I'd be too shocked unless there is news or data or this sell-off from Friday was serious and we see continuation into Monday. I mean, sometimes you do, when we sell off on Fridays, sometimes you do see continuation in the early parts of this week, and then you have turnaround Tuesday from that perspective of it kind of would rebound the next day, but it doesn't always happen. But it's something I'm keeping in the back of my mind. Basically, I'm going to be a little patient this week and see, which side really shows me something in the early parts. Because like I said, if we get those bullish flows into the end of the year, end of the month, I want to be a part of it. I'm not looking to short that. I'd much rather see how things digest on January 2nd. If I was going to be looking for another swing short or another, short like I took on Friday in the mid morning. But that was a simple trade for about 40, 50 points. I just took it with a little more size for once because I'm trying to get better about the right opportunities too. If I up my size, I have pretty good confidence in my stops and my entry. If I was because I threw on a 5 lot on Friday. So we'll see what that looks like. But like I said, as far as getting pretty bullish in NQ, I really want to see us over 800 before I really am thinking for longs. This 730 spot, 750s, I have no interest in kind of being chopped up by this. It could reoffer right around this general area, kind of that midpoint of Friday's kind of initial opening range or 30-minute opening range, initial balance, but I don't want to get chopped up in this area personally. And as we are going through this, guys, we don't have any earnings this week, so there's more time for us to potentially talk, answer questions. So if you have any, feel free to start throwing them in the chat. We'll grab them, and I will get to them towards the end of tonight's show. So feel free to start throwing them in, and we will grab them and circle back towards the top of the hour before we wrap up here. But with that in mind, let's jump over to GC. And what a surprise. Gold is still stuck in the range, the soon to be possibly overtaking crude of the range from hell. No, so we are still very much in a larger balance area on GC. Once again, this is a situation like we've been talking about with crude, where once it does finally break, you want to be a part of that larger move. But it may be trying to put in a general bottom here based on last week. We kind of went down and retested that 2,600 low the previous week. And now we are kind of had multiple attempts to kind of break down and go back and retest 2,600. And it's rejected. It rejected 3 times last week. So a good area to watch is still going to be that kind of 2630 spot to potentially get long for a trip back up towards the 2650s, 2660s, and maybe even a breakout all the way to 2700s. Who knows, once again, with end of the year shenanigans, how this may go, but the logic is you should still be fading the edges of this range until the range is broken. So looking at all of these weeks of distribution, you're at the bottom edge of this range coming down to 2630s, maybe even down to the 25s to kind of be playing the long side of the range play. Like I said, for a trip back to the middle, or if you're holding runners somewhere up towards, the higher 26s, even 2700. But as I've said for the previous couple of weeks, I'm still looking for a good entry to get a swing long in GC. I haven't quite been too confident in it just yet. It may have been this 26 spot, but gold hasn't really showed me much. Last week, abbreviated week, was a pretty tight range. I was trying to get long intraday somewhere in like the 30s to 40s, and I just couldn't get a good entry or didn't feel very confident in just the momentum that gold was showing in either direction. So keep that in mind too. Another shortened week with the holiday for New Year's Day on Wednesday. So who knows how much volume, how much momentum we really get towards any sort of trade in GC, but I am still personally looking for a good long opportunity that I can either hold all day, kind of a trend day range, larger move type week. And it just hasn't happened after these last couple of weeks of a much wider range. That's about as tight as a range and we've seen in GC in, months, guys, when you really look at this. Like look at all the volume profile from each week. Like that is a very tight range. So it was not a good week to trade GC for our gold traders out there. This was tough sledding if you just could not get the perfect entry. You probably just got chopped, or you had to cover pretty quick, or there was just not a lot of movement. And with all the volatility that we saw in equities at times last week, we did not see that in gold. So like I said, longs in this bottom area, looking for that all the way up to the 2650s, at least to cover the kind of core of the position if you were taking a trade intraday. So we'll circle back in the early parts of this week, see if gold's evolving, kind of breaking out of last week's range, because there may also be a play there. If we break it to the upside, that may be a long kind of breakout in the 2650s for a trip higher if we actually can break this tight range from last week. I don't want to even look at crude, but we're going to talk about it because it's finally up back towards 70s again. So you have two options here. Three options. You either ignore this asset completely, like I do, and you kind of just keep it on a watch list. You maybe look at it. You really don't care. You hear some of your trading buddies complain that crude's not doing anything, and then complaining like, why am I in this trade? Like some of my friends do. Or you take the range play short, somewhere up here in the 70-30s, 70-20s for a trip back down between 68 and 69. That might be the smart play because I haven't seen anything. Crude, who knows? A headline could change everything for crude in 6 seconds, but we've had so many headlines and we're still stuck in this dang range. And it's the most frustrating asset I've ever seen in my entire life. So with that in mind, I'm once again not going to trade crude, but as far as if you have been trying or waiting for us to go retouch one of these edges again for at least a wider move, this could be your opportunity in the early parts of this week. If crude is trading, somewhere in the 70-30s, 70-40s, the higher edge of this multi-month range, there's a short opportunity because you know where you're wrong. Somewhere up here, you kind of know if we start to break out in the high 70s, you should probably be out of the trade. And we might be finally breaking out to the upside, or it just may reoffer later and you entered a little early. So you're doing the range play. That, honest to God, is probably the safest play. I'm not leaning towards the breakout because nothing, in my opinion, has really changed just yet. It may finally be the time, but I haven't seen it. So you could sit out and wait for the breakout, or you could take the range play short for that rotation back down towards the 68s, the higher edges of this value area from going back months. That might be the smarter play, just knowing how long it's been consolidating. But the other thing to keep in mind is you have another week where these this kind of midpoint, these 68, 70s held once again. So you're starting to build volume a little bit higher in this range. So keep that in mind if you're taking that short. I have no edge because I hate this asset class and I have no interest in trading it right now. But it's something that you guys should be aware of is, we came down, we've retested these lows going back 3 weeks ago, and now volume is starting to build a little bit towards the higher side of this range. So is it finally going to break out to the upside and go tag 72s, 73s? I have no idea. I have no interest, as always, in trading this right now, but that's the play. That's your options. You either are playing this kind of in the higher 70s, you're waiting for that, maybe for the final breakout, or you get a very violent move to the upside, at least towards 72s, possibly up towards 75s. Or you kind of wait and see how it moves, how it consolidates here, and maybe you take that swing short back for a trip towards 68, 69s. That's how I'd be reading this. I just don't know. I just have absolutely no idea which way, because there's still no real momentum as far as direction on the 4 hour. We're still in a downtrend. We're still consolidating. So you guys take that for what you will and what you want to do. But there is a trade here. I just don't want to sit in this for 3 days in theory and get almost no movement because we're still just chopping and consolidating within a point. So that is Crude. God, I hate this sting thing. All right. Let's see what ES is doing. I did see a nice wick up into the 30s. Let's jump to the 5 minute for a second. What did we do? Yeah, wicked up to, what did we do? Up towards 36s, right in the middle of my pivot. So far, that area is still going to act as a little bit of resistance. As I said, I think that longer time frame value area low is a good idea just to keep in the back of your mind. As I said, don't use, in theory, my pivot as this is a good entry. It's just an area to watch. So here's an example. You saw come up again. I wouldn't say Globex this is the grain of salt when it does it during Globex, but you came up, you tested that general area and you rejected, and now we're back under 30. So now you kind of watch, and that's where now you look for a good entry short, because we failed. We came up, tested it, and we failed, and now we're back in the range. So maybe we get that rotation back down lower. If you started to see it, we came up a little bit, we tagged, and we kind of consolidate near the highs of it. That's maybe when you take it long. But I would not say, okay, hey, we rejected off 33s, and now I'm going to short it immediately. That's not the way you kind of use pivots when you do prep. You want to watch what price action does at those general areas. So that's the gist. But that is a nice failure there. I mean, it's Globex, so grain of salt, as I said. All right. So with the abbreviated week, like I said, no earnings reports this week. And I think the banks get on rotation pretty quick in January. I don't know if it's next week or the week after, but I think we're falling back into the beginning of everyone's favorite earnings season cycle. And we'll, I'm sure, be in February, maybe with a nice little pullback. And eventually maybe Tim Apple has to save us once again. Quarter after quarter, he seems to find a way to do it. But we are rotating back down towards the low of the session so far, off that rejection. All right. So as far as data releases this week, we do have a few that we should be watching and paying attention to. The biggest is going to be after the bell tomorrow, 15 minutes. We do have Chicago PMI, always does provide a decent move, or at least a nice algo spasm to stop you out of a trade if you took one in the first 15 minutes or you're still holding one into that release. So a lot of the time when it's on a Monday, I tend to just kind of wait for the dust to settle off the open and wait for the news release to come out for PMI, and then maybe look for a trade. But I don't love jumping in the first 15 minutes of Mondays during this kind of week with that data release kind of shaking us or staring at us a few minutes after the open. So just keep that in mind for tomorrow, that you do have, or not earnings, you do have data releasing 15 minutes after the bell. You do have a 6 and 3 month auction right at the Euro close. As I said, with everything going on in bond land, I think it's a good idea just to either be flat during some of these or just be prepared for maybe a little bit of a spasm or volatility right as that they usually come out like 2 minutes like it says 10:30, but by 10:32, you kind of get the release of the result of the auction, and then you get how the market is responding to whatever that is. But this is the 3 and 6. The big ones to watch are the 2 and 10s, and those were last week. I don't think there are any others. Yeah. But just be aware of some of the bond auctions. We do have the long bond later this week too. Yeah, no, it's 30-year mortgage. Don't we have a 30-year auction? No, maybe I misread that as the mortgage rate. Yeah, I guess I thought it was the long bond. So ignore me. And then you have Dallas Fed and Schiller, nothing crazy. You have PMI, or the S&P Global Manufacturing PMI on Thursday. So in the new year, same thing at 8:45. It is a lighter week. We do have a 4-week auction, 8-week auction. And then Friday, the big one. Oh no, we do have jobless claims too on Thursday. Yeah. So as always, or as it's been for the last couple months, the employment data seems to be a little bit more market moving at times than some of the other data releases. So just be aware on Thursday at 7:30, got initial jobless claims. And then on Friday after the bell, we do have ISM manufacturing PMI as well. So nothing that's going to really chaotically move the markets unless it is a wild miss or something just crazy of a data result. So, but other than that, nothing that should catch us too off guard. No Fed speakers. Still in a blackout period, I guess. Yeah, no Fed speakers. Good for them, taking a nice holiday from their book tour or whatever is going on these days after last FOMC. So yeah, as I said, pretty light. Nothing too crazy. Nothing that's going to probably cause Armageddon or chaos in the markets, or it's going to move it too much. But always be aware, majority of these are going to be after the bell this week. We do a few, obviously, on Thursday in the pre-market, but most of them are the ones that are shortly after the New York Open. All right. So next we'll talk about a little bit of the gamma exposure and options data from Friday's close. Not a whole lot has changed. Still the biggest strikes are going to be that I guess it did shift down a little bit. So 60-50, which is kind of that top edge, that 60-110 spot I was talking about, is basically up here. And then there's, depending on who you follow, who you listen to on Twitter, people love to bring up I wish they would just shut up about it, but the JP Morgan collar trade for some reason always gets brought up. But that is just normal options activity. It's sitting right around here at 60-50s. So just keep that in mind too. That is a larger call strike that we may go ping at least once this week. We may get above it. Who knows? But that's a big options activity. And then obviously I was talking down towards 5900s on ES. I didn't see us getting down that far. This is SPX. So ES, that would be somewhere in the 5960 basically spot if we were to some reason go tag this. But the big elephant in the room is still going to be SPX 6000. It's almost like an even distribution. It's a little skewed to the negative side, but when you look at it on the gross gamma exposure, it is the largest. So we most likely will ping it. We'll probably provide some support at times, some resistance. It may act as a magnet this week, but just be watching that level at times, the 6,000 spot. So we're, I don't know exactly, but we're like 30 points below it right now. On ES, maybe a little, I don't know what the exact spread is off the top of my head for Friday's close, but somewhere between probably 25 to 35 points is basically where this is from here. So just as we open tomorrow and you see that spread, just keep that in the back of your mind this week. The 6,000 strike on SPX is going to probably provide some level of a magnet because it is between the other two big strikes. So other than that, nothing has really shifted too much, and I wouldn't expect it going into the end of the year, or at least in the early parts of this week. Going into the end of the month and things, I would expect this to still look similar going into tomorrow and Tuesday. How it shifts on January 2nd, who knows? We'll look at the 0 DTEs and everything else as we always do. But for the time being, we may be wedged in that kind of 80-point range that is the implied move based on options activity. And as much as people don't love to talk about it or say people are, looking at this stuff is crazy and it doesn't actually add a lot of relevance. I mean, I think when majority of whatever the number is now, like 57% of the S&P's volume is coming from options now. So it's kind of stupid, in my opinion, not to at least think about it. I don't know exactly how much it's actually weighing on it, but I would say I've taken some good trades off it. I've taken some bad trades off of it. So we'll see how it evolves, but it's kind of crazy when options are that much of the volume intraday and it's all 0 DTE options is even crazier. So that's the gist. As I said, not much has changed. 6,000 being the big strike, something to keep in mind, but 60/50s as well as all the way down 5,900 if you got some real violence going into the end of the year, but I highly doubt it. We'll see. Like I said, I'm taking Friday's move seriously until proven otherwise by buyers pushing us back above that 60/40 spot. So that is the gist. Shall we get to some questions? Let's get to some questions. Oh, Scott has a question that I just see popping up as I'm getting to others. So as far as options, how it can kind of affect futures. So I don't look at it much more as these are large pools of liquidity in theory. And this is not volume. This is just the overall gamma exposure. And there's a whole rabbit hole you guys can go down through if you're really curious. But the logic is just like you see liquidity on the DOM, some of these larger strikes can act as support, can act as resistance, can act as magnets towards, price action gravitating towards it as those calls are monetized, as people exercise them, as market makers shift positioning for the purposes of hedging, even hedging against, people's calls going in the money. So there's a lot of things that can affect it, but all it is, you got to think of these as just areas to, like we were talking about the pivot, areas that can act as not necessarily potentially entries, but as areas that you can feel confident if price action builds above it or below it, that you could feel confident taking a trade in that general direction of momentum, knowing that we failed, let's say at some of these levels. So that is kind of how you read it. But obviously as positioning changes, one of the ways that market makers, using options can also adjust or hedge their positions is going to be with futures contracts too. So it's definitely can have an effect on price action in the capacity that as positions shift, as things adjust, as people close it, as price action changes it. This is one of the reasons why you saw on FOMC, I think the velocity of the move and the violence of the move and why it was just continuing is when in theory, like nobody is actually positioned for potential downside with hedging and things like that, you may see those type of cascading moves to the downside because no one has that sort of protection and nothing's there to stop it. So as market makers are almost repositioning, they have to almost sell into strength. So that can affect the movement on futures as well, because it can just exacerbate the moves. That's one of the theories of like when you're in negative gamma exposure, that institutions, that market makers, it just is like the way they have to reposition as price moves is they have to almost like buy into strength or sell into strength. They just have to go with the momentum to kind of protect their own downside based on, positioning. So that's kind of how you think about it and read it. Like I said, I'm not an expert by any means. I am just a trader like all of you, just a regular guy, but there's so much information. There's so much content on this. If you're curious or you are an options trader as well as a future trader, like I said, I dabble. It's not my primary investment vehicle. I have dabbled a little more. When we get to extremes, that tends to be when I may take a position with options. I'm just not good at, buying super out of the money calls and them monetizing the way a lot of people have made money. I feel like in the last 2 years, it goes against the trader in me. Cause like, why am I buying this random, meme stock or whatever because of all the short exposure? It doesn't fit the way I trade. So obviously there's opportunities, there's different things you can do, but if you're curious more about this, there's a ton of free content on YouTube and you guys can learn a little more, but that's kind of the basic gist of it. All right, we'll get to some more questions. Can you briefly talk about how you set your volume profile? Absolutely. We do this every week. So on the right, this is visible range volume profile or volume profile visible range. in Topstep X. I keep it set as ticks. You can do your row size for ES at 4, which is 1 point. And I keep the value area at 70. And then I adjust my color so that you guys can visually understand what I'm talking about when I say value area lows and highs, and the actual value area being in white. So the blue is going to be value area highs and lows, that 30% of the volume. And then the white is the kind of bulk of that 70%. And then zooming out, I'll go back to the 1 hour. And then these are the fixed range volume profiles. So Topstep does not currently auto draw these. So you have to grab the fixed range volume profile, fixed range, basically. And then you just select the candlesticks you're looking to cover. So I just draw these before I jump on with you guys every Sunday, but it'll spit out the histogram of the previous week or whatever you want to draw the last 2 weeks like this. And it'll give you an idea of what that volume looks like. But the settings on this are the exact same. I keep it pretty simple. But those are my settings. That's kind of how I use it. And it's just a different way, as always, to kind of read the previous week's volume. There's a number of different ways, but this is kind of how I've always liked to visualize the candlestick patterns and the volume from the previous week. It just is a super simple way to understand where the most volume transpired, where the least amount of volume transpired. Some people like using TPO charts and other things. So that's just how I've learned and how I like doing it. Nick, do you place much weight on NVIDIA call activity, 15 million worth of January 140 calls? I do, but I do more on intraday, depending on the size. I like to see, just because it can affect the flows. I mean, NVIDIA calls, nothing new. At 140, nothing crazy. 15 million doesn't seem that high in theory in the grand scheme of things, especially when it's been trading, when those calls, I think, were actually in the money at one point on Friday, maybe before we kind of really opened. What is NVIDIA trading at? 137. So I place a little bit of it, a little weight on it, but I'm more so watching intraday activity for as far as single stock options and things. That's nothing new, I guess. 15 million worth of NVIDIA. It seems almost regular at this point, especially when we get any sort of weakness in it. You eventually see those kind of hitting the tape. But I take it seriously because it's the end of the year. Like I said, we make it that violent move to the upside with passive flows buying everything. So those could monetize, tomorrow or Tuesday, and it won't look like anything. But obviously, people are still very bullish. Nothing has really changed. We shook off the FOMC lows. So, like I said, until proven otherwise, everything still points to let's go hit an air horn or something eventually. I don't know if it's going to be this week, but everyone's still super bullish. There's no data outside of FOMC that's really going to send us down the elevator shaft. I mean, I'm still as bearish as I could possibly be when we're trading at all-time highs. So looking for a nice swing short, and I've caught 2 of them. I was in a position for a swing short here, and I was in a position for a swing short here. I have already covered those because I don't look for, flash crash Armageddon when I'm looking for like a 3 to 5% move, and we get 2% of that in a single session, like a day or two after I've bought, in theory, taken a net, not a net short position, but a larger size short position. I'll cover majority of that with a decent move in a quick session versus us kind of stair stepping down 5% over, 2 weeks. That's not going to monetize, a swing put buy the same way velocity move in a couple hours will. So that's why you might have seen me on FOMC, like I was covering short this whole way down. And I'm glad I did, because those would have basically been worthless at this point, unless we got another violent move to the downside or VIX was back in the 30s or something. So like I said, longer time frame or further out expiries, I take them seriously, but in NVIDIA, everyone's bullish in NVIDIA, so it's hard for me to get too worked up over it. But if I saw those hitting the tape, and we might have been trying to form a bottom, let's say an ES or NQ, and I saw those hitting, that's a good sign. That's something that I'd be looking at to form at least an intraday bottom to get long. If I saw those coming in and we kind of had a wick, something like this 1 hour wick that we saw on Friday, you saw that kind of bottom forming, trying to form, you may be taking a stab long when you saw those calls hitting the tape. What is Globex? So that is a nickname for whatever you want to call it. The overnight session, when, you know, the rest of all the futures markets open. It is just a slang term at the end of the day. I don't know if people actually use it. I think it actually was in the Series 3 book now that I think of it, but it really is just something that because this is like that, you call it the Globex Open. At least I have always learned it that way or called it because this is like, Asia's not open yet. Obviously we're not in the New York Open, but the Sunday markets, the futures markets have been open on Sunday nights. They're in the overnight before kind of Asia opens. It's just, I've always referred to it as Globex because it's not really the Asia Open yet. So it's always stuck to me because it's when the world markets kind of kick off after the mandatory hour close that we see after the New York cash close. So that's just it. It's just a good way to kind of say the start of the overnight session. Basically the hours of, 5 Central to, I don't know, whatever you want to call it. I don't know what we even consider the New York pre-market anymore, where I wouldn't consider it Globex. It's probably around 7 a.m., 6 a.m. or something. So if someone actually knows what that's considered, throw it in the chat. But yeah. Nick, what is the VIX ticker? It's just VIX. I think the VIX futures is /VX or something. I don't know. I don't look at it too much outside of just the normal VIX intraday because everything else is kind of irrelevant. VIX futures, I mean, good luck. Everyone just sells volatility because they hate traders. The larger players just hate traders. So they like to sell volatility to keep us in ranges and have us just slow grind to the upside and make us all pull our hair out in the middle of the summer when the VIX is at like a 14 or 12 or something. What are your thoughts on Janet Yellen's comments about the Treasury taking extraordinary measures later this month? I love Janet Yellen in a weird way. She's like my favorite, everybody's favorite, market grandma in a weird way. But no, I have so much fun randomly making memes and AI images at this point. But I take that seriously, especially with what the bond traders have been saying with the futures markets, continuing to kind of sell us down. I think we hit like a 6-month low on one of them. So I take it seriously. It's something, like I said, there's a reason both of these trades happened. I didn't think we were going to get the move in the way we did, which is why I covered. And the market just loves to make it, hates shorts, hates anybody that takes a short position. So naturally I cover, but I'm in the camp that I take that seriously. And it's the same reason why I took short position here and a short position here. So I think something's going to happen in bond land. And if something does happen, it usually is a bad thing for equities. When it happens and how it happens and if it does, I don't know. But I'm betting on this. Like I said, both these trades were me betting on the side that eventually that's going to matter. And eventually the markets will care. The markets are forward looking, but it doesn't seem like they're really looking, or they're just shaking that off, and they're shaking off FOMC. So I'm not trying to be the first person to call a top. I took that short based on this consolidation, us retesting all-time highs, kind of failing again, and, potentially something happening with FOMC or the market shaking off the 99% sure that there was going to be a cut, and maybe eventually saying, okay, I wanted to see what the dot plot was, but I had a weird feeling the dot plot may not show as many cuts as they would, and the market may not react positively. I didn't think the reaction was going to come from Powell basically saying without saying we almost didn't cut in December, but we'll see. But yeah, as I said, I would take that seriously. I mean, who knows with the new administration? I mean, Janet's days are numbered at this point, so yeah. But I would imagine the U.S. debt and what the bond traders are saying is going to matter in the shorter time frame than I think people are thinking about it. We'll see. We'll see how the reaction is this week. It's hard, like I said, with last week and this week, it's hard to think about price action too in depth. I weirdly would think it may take the following, not this week, but the following week, like the first true trading week of January, when real traders are back, when institutions are kind of rebalancing, repositioning, that you may finally get the real move kind of post FOMC, post reaction of the dot plot and everything else going on. You may finally see that as the books are kind of reevaluating for 2025. It just may take another week. Does initial balance apply for Globex or usually the New York Open only? So that's really up to you. I only use initial balance for the first hour of the New York Open. Obviously, I don't have it anywhere else on my chart, or I don't have the auto plot basically do that for me for anything else. This is a personal opinion. You guys, I would tell you to, if you are going to watch slow markets later, see if Dakota will have a better answer or a different perspective on this. But as far as MGI for the overnight session for Globex as a whole, I think you're much better off using the ranges for the Asia session for London, and kind of utilizing the highs and lows of Asia to trade London, or the highs and lows of kind of the pre-Asia Open here to kind of guide what you do after like 7 p.m. So in about 2 hours worth of range, like what does that tell you if you're going to be trading kind of when Dakota's on? So that may be a better way versus trying to throw initial balance for the first hour on for, kind of the Sunday Open. I don't know how much relevance it has. I've never back tested or thought about doing a sort of opening range or initial balance for the Sunday Open. There may be something there. Maybe someone smarter than me has come up with a decent range play or time play based on how the Sunday Open transacts, but I have never back tested it. I've never thrown something on my chart and visualized it either, but there could be something there. But I've seen people use kind of the Asia range, the London range, for then utilizing in RTH as well. So there's probably something that you could do or apply to kind of start analyzing and figuring out, but I have never personally thought it had any significance because of just, as you guys know, the London session tends to be just incredibly bullish. It's when majority of the gains are had. Shorting in the overnight is a fool's errand. So I don't know how much that range really adds a lot of value, because you should be looking at any point in the overnight just based on statistics for a lower move to then buy and ride into the New York Open, because that's when majority of that buying takes place. A lot of the time, literally, if you look at statistics, like the New York session is almost, it's flat into the upside a little bit. But then when you factor in like what is the move against like the London session, London just buys. So that provides a lot of the kind of upward momentum some days. But I don't know how much relevance like something like initial balance would have for Globex. So like I said, I use it for New York, and that's the only thing I use it for. Can you analyze NQ also? Yeah, we kind of did, but I can do a quick one. So as I said, as far as the NASDAQ, we did pull off. Sorry, I've been talking, and I just saw ES is off about 15 points from that high. NQ kind of coming off. This is why I said like, hey, we could also reject in this spot just based on the same balance area that we were talking about. But as I said before, I got really, really bullish. I want to see us kind of clear all of this volume and get above kind of the 800s, 810s, 815s spot before I'd really be looking for a long in the seven. I'm not going to be longing in like the mid sevens unless I was really watching price action and saw, a good opportunity there. I'd much rather, before I got too bullish for going into the early parts of this week, to see NQ kind of above 21,800s. Kind of that where we kind of broke out to the upside last week. It's the same thing going back like 2 Fridays ago. I think Jay and I were talking about on the trend day after FOMC, like, where would you sell this? Well, that's the same general spot. Because if we zoomed out, that is still, do it like this. That is still this higher volume edge here. And that's probably a better way to talk about this right now. But if we got above 800s, we're probably taking a trip back to 22,000. And if we were to kind of fail in this general area, the first place you're going to find buyers is back towards kind of the 500s, 550s, maybe even all the way down to, like I said, that 500 spot. So between 550s and 500s on the lower end, you could see and find buyers there. But if you lost that, you're going down to the 300s, the 200s in NQ, possibly all the way down to 21,100s if you really got weakness. But I don't know how weak the market is going to get this week. Like I said, I take Friday seriously, and you guys know how fast NQ could move. So if you started to lose 500s, I may not want to knife catch this. I might want to see if we go retest the FOMC low before I got real happy hands trying to knife catch us starting to break some of last week's volume. All right. Let's see. Any good sources for statistical studies on markets? I mean, that's an interesting question. Depends on what you're looking for as far as like studies. I would say that's a very wide question because it really would get down to like, there's going to be studies on, of course there are, but it really depends on kind of what you're looking to actually analyze or study. If you're talking about options data, are you talking about, something like an initial balance breakout, or the percentages that it happens, and the period of, if you're looking at things like TPOs, like what period during the session does that breakout typically happen based on statistics? So as far as like good statistics, I don't have a good source for a number of things. It just kind of depends on where you're looking to focus. But my first and primary place to kind of understand and research is always going to be is YouTube, honestly, for certain strategies and ideas. But as far as actual statistics, I mean, most of my trading buddies are there. Some of them have like a quant edge in them, and a lot of the time they just share things that they analyze and do. So, and it's like just things that they may bring to your attention that are important. I have a good trading buddy who's done a lot of good research on single prints when they occur and how often it can lead to a trend day. And when there's more than one set of single prints, your probability of fading that second set of single prints is only like 12%. So if you see two sets of single prints, for example, there's no sense in trying to short it if it's a move to the upside, or that I would imagine when it's a trend day to the downside, that's where that 12% actually comes into play. But other than that, I mean, you just kind of got to do research based on what you're looking to actually analyze. Most of my statistics comes from good trading buddies and good community and people that I have around me, and that, just share good information. I am not the quant type that's coding things, that's building, language that's actually going to analyze all of that raw data. It's just not my skill set. I paint pictures with words. I don't then actually do the dirty work of engineering and coding and figuring those things out. I have much smarter people than me that have done that work, and I am very thankful for them, but it's just not my area of expertise. So what I would tell you to do is just start trying to funnel it down to a specific example of something you want to understand a little more, or a strategy or a time frame, whatever, and then kind of start digging in from there. What indicators am I using? In Topstep X, I use volume profile. These levels are the Topstep levels, but I keep it for Hoag's secret sauce levels, the weekly kickoff low and high, settlement, and then the value area highs and lows. That's relevant for me. And I have a lot more MGI on other charts, different things than these. But honestly, if you're starting out and you are, you're kind of information paralysis or analysis paralysis, a good thing to use is just going to be MGI, because the market tends to respect that information a lot better than any sort of other things you can kind of, start to develop. And then you can understand in the future why price reverses at some of these spots. And then you can kind of understand, like, what does that actually mean? A value area low, a value area high. Why did price kind of reverse off there? Or why did that act as support? I think MGI is like the most simple, easy indicator that you can throw on charts, just because you don't have to do the work yourself to figure out what those levels are. And then I read price action on a DOM and with delta by price as well, to kind of understand volume a step further. But as far as other indicators, that's pretty much what I use. I have some other things that can make reading time and sales a little easier, but that's the gist. Most of my trades are going to be based off, MGI, and then what's happening with price action in real time. All right, so let's recap the ES prep, and then I will send you all on your way. We are selling off. We did. Look at that. I know I was talking smack on my own levels on don't take trades off of it, but that is a failure, basically right at that same spot, and now a move lower. So we said you wait for confirmation of that failure, and then maybe you take the trade. So there's an example. Like I said, who knows with Globex sometimes, but that does make me feel confident that is still a good area that the market is going to respect. And Yeah, clearly that area means something to somebody. Oh, and yeah, I keep using the word MGI. MGI means market generated information. So it just means specific things that have happened intraday, during the week, whatever, and it just will spit out levels based on price for whatever that may be. You could have MGI that's, the cash close or the previous day close, the New York Open, whatever it is, the first tick, basically that price was what. Like you can kind of spit those out, but whether you're using TopstepX or something else, there usually is some aspect of an MGI indicator that's pre-built. If you're using like Ninja or MotiveWave or Sierra or something, a lot of these things are sitting in there. Or TradingView has a million of them. So if you're not a trader on TopstepX, but there is a simple one here that basically will auto spit those out for you. All right, so the weekly prep on ES. Obviously, I'm looking for bulls to show me that they're going to build volume of 60/40s before I'm really getting too hopped up buying it in this general area. I don't really have a ton of interest in transacting right around that kind of 40s to 35 spot. I'd much rather see what we just saw in the Sunday Open, which is a move up, a failure, and then sellers kind of showing me something on the gas for potentially a rotation back down towards that 59.80s spot, kind of the lower areas of last week's range. And that would be last week's value area low, that 59.80s. So looking for potentially rotation a little bit lower if we fail there, possibly for that trip down there. And then, like I said, my kind of full extension week low would be somewhere between the 59.50s to 59.60s. I could see us coming in, making an excess low down there. And then the, Armageddon low somewhere down here towards the 5900s if we actually got a real move down. But I don't know if we're going to get that based on end of month flows and the end of the year. But if you built above 60/40s, like I said, I'd be looking for that trip back up towards 61/10s, which is that 60/50 strike on SPX, as well as, according to people on Twitter, the higher end of the JP Morgan collar trade. So we'll see if Jamie Dimon wants to keep us wedged below that. But that is the prep. That is the idea. I hope this has been valuable to some people. I hope this has provided a little bit of insight or given you guys a couple ideas of how you can potentially attack this week. As we said, NQ looks very similar to this. GC looking for buys somewhere in that 60/30s to 65/25s. 60/30s, 26/30s to kind of 26/25s, potentially for a long up towards the 50s, maybe even to 2700s. On CL, you have a possible breakout to the upside or the greatest range short that we've had in at least another week. Those would be your two plays and a couple ideas that, at least how I'm seeing it. Options activity could keep us wedged somewhere around 6,000, but for the most part, guys, this week may be a little wonky with the end of the year, end of the month. So be safe. If you've had a good month, if you've had a good year, don't screw it up this week is my biggest advice. I got a little red last week, not on the year, but I didn't have a great week and then recovered majority of my losses on Friday with one trade. So don't do what I did. If I just kind of didn't trade most of the week like my original plan was, then, I would have had a better week. So don't do that. As I said, if you've had a good year, there's no shame in kind of locking it up and seeing how things digest towards the latter half of this week if you really want to trade. But I hope everyone enjoys their last trading week of the year, their New Year's Eve, their New Year's Day. We got some good college football this week. So everyone have a safe trading week, have some fun, enjoy your New Year's Eve. No matter where you are in the world, it should be a fun, fantastic, volatile week, hopefully for traders. So be safe, have some fun. Everyone have a wonderful rest of your Sunday, and I will see you all later this week on Topstep.